is with me, the economist of macro policy perspectives and the finance professor at the University of Texas. Now, Julia, it's really a case of, in your view, is the cup half full or the cup half empty? Because whilst it means no recession, or less likely recession, it does predicate that the Fed's going to have to do more, earlier, faster and harder.
Well, I think it's very hard for me to look at a job market like this and not think that it's good news at the end of the day. If the economy has greater underlying strength, and that means the Fed might tighten policy a little bit more, that is still net good news. We have suffered a lot of headwinds from rising inflation and the war in Ukraine. And yet we are still chugging along, powering along, really. And anybody who wants a job can find a job. And they are still getting some very solid wage gains. Even though they're not quite keeping up with inflation, it's still a pretty healthy flow of money into consumer pockets. So even a soft landing, Richard, requires resiliency in the labor market. So I don't think this report tells us one way or another whether the Fed can engineer a soft landing, but I do think it tells us that the U.S. economy has better underlying momentum.
Right, but the whole purpose of the tightening of monetary policy is to slow down economic activity. And that,
yes,
I mean, pretty much in traditional sense, means raising unemployment, albeit you hope not that much, and certainly cooling the labour market. If you have a labour market this strong, that's in contradiction to the Fed's policy.
Right. Well, I will say there are some details in the report that do suggest there is some shifting going on that might mean the job numbers are a little bit overstated. We've seen hiring in the survey that underpins the unemployment rate, the household survey, slow more than payroll numbers. And the difference between those is self-employed and independent workers. So self-employed people and then like home workers, like nannies and housekeepers. And what we're seeing is a shift from independent or self-employment into formal employment. And that might reflect actually some tightening in policy, some squeeze on purchasing power from higher inflation that is leading people to choose, more formal employment than the sort of gig economy jobs that they were doing before. So that might actually, at the end of the day, be an indication of some softening in the economy and some squeeze on consumers. And we have seen consumer spending slow. So it may be that the payroll numbers, the blockbuster number, there might be just a little bit of overstatement in that number. And, it's not a precise science for the Fed. Whether or not they really have to drive unemployment higher to get a cooling in inflation, well, that's the Phillips curve, right? That's the relationship we talk about, but that's very imprecise. It may be that just the removal of some of the fiscal and monetary support that has driven markets and consumer spending over the last couple of years is enough to make consumers a bit more price sensitive as they spend out of only their own labor income and not all of this sort of bubbly financial market excess or fiscal support. They might pick and choose a little more carefully and cautiously, and so we could see inflation cool.
So this interesting question, and I guess at one level it's academic and at another level it's moot, and it certainly doesn't really help us greatly whether the US economy is in a technical recession. The NBER will decide that in its wisdom in the future. The reality, though, is if this is a recession, it's a bloody odd one.
I would go so far as to say we are definitely not in a recession. A recession does involve rising unemployment and usually job losses alongside weakening GDP growth. We know GDP growth is subject to massive revisions over time. So the Q1 number was clearly odd. The Q2 number had some more, fundamental underpinnings. We do know the economy has slowed, that spending has slowed. But with a job market this strong, even accounting for any of that kind of overstatement I suggested, the unemployment rate is the unemployment rate. It's at a cycle low. If it's still nudging down, we're not in a recession, pure and simple. No NBER is ever going to call it one.
All right.
It's
Julia
good news.
Coronado,
It's good news.
with no recession on the horizon at the moment. Let's take a break.